Welcome to Trading Nation. Let's talk interest rates because bond yields are quickly becoming the market story of 2018, and not just for stocks. Craig Johnson of Piper Jaffray and Mark Tepper with Strategic Wealth Partners are your Trading Nation team. And Craig, why do you call just above this level on the yield the, quote, danger zone for bonds and maybe even stocks?
Well, Brian, let me lay this out for you. As I look at the technicals first and foremost, and what I view as a danger zone here is this kind of 260, 270 range. And the reason being is when you look at a shorter term chart on the 10-year bond yield, we start breaking above the highs we'd seen back in 2017. And when we start breaking through this level, and then you look at the longer term chart, you'll notice that there's an intersection here between a 36-year downtrend in interest rates breaking above the highs we've seen in 2017, and we're starting to reverse one of the longest trends that we have seen in the market for this entire cycle. And we think that this reversal of this 30-year downtrend is going to be significant. The reason being is that we know that looking back in history, that when we've had these major inflection points in interest rates, that they've corresponded pretty well with the starts and ends of secular bull and bear markets. And I think that this reversal is meaningful enough that I have to question whether bond investors, central banks, and investors, we can make this smooth transition from a downward sloping interest rate environment to an upward sloping environment and not see this market stumble. We got a little taste of it the other day, Brian, when there was a piece of news, fake or not, came out that said that China was going to slow their buying of U.S. bonds, and 10-year bond yields came up. I look at the shape of the curve right now. It feels like a compressed spring at the long end of the curve, and I worry that bond rates shoot up too far, too fast over the short term. The market stumbles. Now, that will be a great, great buying opportunity to buy stocks, as I still think the long-term secular bull market will ride until you get to a 5 or 6% 10-year bond yield.
Let's get more on stocks with Mark in a second, but one final question to you, Craig. We had Bill Gross, legendary investor, yesterday on our show Power Lunch. He said the 25-year bull market for Treasury bonds is over. Do you agree?
100%. I agree with him.
Okay.
And that 260, 270 danger zone is right where we're at.
Okay, we're watching that. So here's the other question then, Mark Tepper, on the stock side. Is it going to kill the stock rally? Will 2.6, 3%, 3.5% bond yields hurt the equity markets?
No, not at all. We actually think this is bullish. So if anything, we would argue that a rising 10-year yield just indicates continued confidence in both the economy and corporate earnings, and it should be good for stocks. You know, historically, the direction of interest rates and stock prices are positively correlated until the 10-year gets around 5%, and we're still far from that. So we're a firm believer that tax reform is going to stimulate CapEx, and we don't think rising rates are going to prevent corporations from borrowing so that they can fund their infrastructure investments. We also think that wage growth is just right around the corner and will continue to support increased consumer spending and stock prices. I mean, Walmart just raised their minimum wage today. Rising volatility is definitely a possibility because there are some structural issues like global debt levels, but I don't think a major equity correction is anywhere near us in the near-term future.
Okay, the markets can weather the slightly higher rate storm, but again, if Craig and Bill Gross and others are right, we might get to 5% in a couple years, I guess, Mark, but that's a couple years off, so the bull market should continue. I know, Craig, you've been calling for a slow melt-up for years, and you've been right on. Mark and Craig, thank you both very much. As always, folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.